This is the Asia Trade. I'm Shery in Tokyo. The top stories this hour. A cautious open ahead for Asia as investors drive a rotation out of chip makers after Broadcom's disappointing outlook. The Dow hitting an all-time high ahead of U.S. jobs data expected to show solid growth. Broadcom CEO Hock Tan joins us live this hour at the Bloomberg Tech Summit in San Francisco. We also have conversations with Anthropic and Apollo. Plus, SpaceX makes a video pitch to retail investors for its $75 billion IPO, outlining bold ambitions, including data centers in space.
I'm Haidi, Stroud-Watts in Sydney. Take a look at the setup for trading across Asia. And Shery, as you mentioned, it's looking like a bit of a muted start to the end of this trading week. One that really has been filled with some highs and lows when it comes to the continuation of this AI trade cycle, as well as this brewing uncertainty over the situation in the Middle East. We are expecting stocks broadly to edge lower on Friday in this part of the world. Investors grappling with the pullback when it comes to AI shares, hopes of that diplomatic resolution to tensions in the Middle East, and a lot of uncertainty with that as well. Shery also mentioned oil. We'll be watching that very, very closely as we continue to have these hopes build that the US and Iran might be moving closer to the diplomatic breakthrough, despite, of course, that conditional ceasefire when it comes to Lebanon not being agreed upon by Hezbollah, which seems to be a pretty key part of that factor. We're also getting that monthly employment report as well, the Friday jobs numbers from the US, that too tight labour market potentially increasing the risk of Fed tightening as well. This is a picture as we look at Kospi futures looking softer by 0.8%. Some really interesting views when it comes to where this leverage proxy essentially for the global AI cycle goes, right? There's rising risks, it seems, of some sort of reversal given how concentrated we've seen that Kospi rally been in really just a handful of these stocks. Dollar yen is now pretty comfortably at that 160 level, but as much as we're on sort of intervention watch, we're hearing also that the Bank of Japan is mulling hiking interest rates this month as well as later in the year. So that brief gain in the yen, though, didn't really hold on for very long. We do have that broader dollar retreat as we're also watching the situation when it comes to short-term yields taking a dip as well. Oil prices, this is where we're sitting as we continue to monitor the uncertainty. The ceasefire, of course, really between Israel and Lebanon, really dependent on if Hezbollah also agrees to stop those hostilities. That's a pretty big if at this point. Brent crude, though, still lower by almost 3% there in the last trade, and New York traded crude looking a little bit to the downside. Sydney stocks looking like we might actually buck that regional trend with a little bit of positivity at the open. In the meantime, though, the Dow, take a look at that, hitting at all-time highs. Wall Street seeing that rotation out of chip makers. Broadcom's underwhelming outlook testing the AI trade for another session. Let's bring our Bloomberg MLive macro strategist, David Savage. So, David, I guess the question is whether we're finally kind of seeing that broadening after so much concentration and whether it's more of a kind of a temporary blip in this AI cycle that continues to ramp up higher.
Good morning. We're certainly seeing it in the U.S. In the U.S. session, we saw financials and healthcare lead, and actually tech stocks actually lagging the rally. Now, we did see some strength in sort of the Magnificent Seven, and I think that points to perhaps this Broadcom soft guidance. It's more perhaps of a moment for consolidation on a trade that's really gone straight up. The U.S. chip makers sold off in the U.S. session, sort of recovered, paired some of those losses, but sold off nonetheless. But this has really been a one-way trade, and we've certainly seen that in Asia. Reflected in the Kospi index in the gains we've seen there. So it's probably a healthy moment for the markets. And really, it underpins what we're seeing across, fixed income and equity markets is, yes, inflation has been accelerating higher in the U.S., but there's been signs that growth is really quite resilient, if not accelerating itself. And so we'll see with the jobs numbers tomorrow. But certainly, it looks like a positive setup for the U.S.
Is that what we've seen reflected in this rotation? Because if we delve in, the fact that the Dow actually outperformed the Nasdaq by 1,000 points, have we seen this in recent days? And what does that mean when it comes to perhaps reflection of the fundamental backdrop that you talk about?
Yeah, it's a good point, but I think it's also tied into the moves we've seen in oil, right? So oil pulled back. That certainly helps cyclicals. We saw small caps up over 1%. And again, the growth backdrop looks resilient. Now, if we saw oil again, push back, Brent back up over 100, We saw some more negative headlines out of the Middle East. That could change things, but certainly the backdrop in and of itself, again, largely done to, because of the acceleration we've seen in AI CapEx spending, which has provided a lift in terms of the macro backdrop in the U.S. as well. That's starting to feed into small cap cyclicals, some of these other sectors. But again, I think the oil price is key here too. That's been a big part of why we've seen a pullback in bond yields, or at least sort of a stabilization there. I'd also say is, the jumps we've seen in oil prices have also been more muted than we've seen in recent weeks. So we'll see how that develops as well.
Bloomberg M Live's macro strategist David Savage there. And bond traders also maintaining bets on higher yields ahead of that critical U.S. employment data that we just talked about coming out on Friday U.S. time. Economists now expecting 85,000 jobs to be added in May, with the unemployment rate holding at 4.3%. Let's go to Washington and our Fed and economy reporter, Enda Curran. Enda, we have seen more solid upside surprises when it comes to U.S. data. What are we seeing in the labor market?
Well, we are expected to see fairly solid numbers tomorrow, Shery, like you mentioned. If they come in around a consensus, it would mean that on a 3-month average, it will be the strongest payrolls data in a year, which is clearly a positive sign. And at the same time, unemployment is holding steady. It's expected the breadth of hiring will be quite wide, not just the health sector, which we've kind of known about, but also keep an eye out for construction, the leisure sector, and interestingly, manufacturing. Manufacturing sector showing signs of revivals over the past few months, so that could add some workers as well. So if the numbers play out the way the consensus projects, then tomorrow we may not be talking about, a stabilizing US jobs market, but the conversation might move on to perhaps an improving jobs market. Not a tight one or anything like that. There's lots of nuance, but certainly an improving jobs market.
What are we seeing when it comes to the health of small business hiring, the impact of tech as well?
Small businesses, they're sending mixed signals. On the one hand, we had some reading today from the NFIB, Haidi, warning basically that their hiring planning, their hiring expectations are pretty low right now. Small business have been on the front line of the tariff story. Of course, the reimposition of tariffs this week in particular will flow through to unsettling confidence among that sector. But more broadly, though, what we are seeing are signs of a labour market that is finding its feet. And part of that is, as you mentioned, the AI tech boom on the data center build-out side of things, but not just the data center build-out, but also with the equipment and the machinery needed to service that AI boom. Now, of course, there's a whole other story about how long-lasting that employment might be after the construction phase is over. But right here, right now, AI is boosting manufacturing. That's boosting some of the jobs growth. But as I say, it's broader than that too. It's not government hiring. It's expected to be construction, retail, leisure, and of course, healthcare driving it. So as I say, if the numbers come in as expected tomorrow, it should be a pretty solid set of employment data.
I mean, it's really incredible, and how in just a few months we've gone from that narrative of Fed rate cuts to a potential Fed rate hike, apparently 70% odds priced in by the markets by the end of the year. So not surprising, we're getting perhaps some conflicting signals also coming from Fed officials. Take a listen first.
Right now, policy is in a good place. We are prepared to respond either way, whatever the economy brings. But I think giving more forward guidance about what's possible could be misguiding in the end, because we just have to wait for the economy to evolve. Everybody wants to resolve the uncertainty today, but I think that's a mistake, because it will close off our mind about what we really have to look at.
Looking at the fundamentals, and what's the direction that the Fed could take?
Well, you've put it very well, Shery. We've had a dramatic turnaround here. At the beginning of the year and up to a few months ago, the big concern among policymakers was the jobs market. They were worried it was too weak. That's all gone now. It seems like every day an official comes out and says they are now more worried about inflation. And we will have inflation data next week, and that's coming 1 week before the all-important Fed meeting with the new chairman, Kevin Warsh, the week after. So the story here is all about price action now. It's not necessarily one about rate hikes, though. I don't think we're there yet. As I say, if we had a big upside surprise in the labour market tomorrow, it would need to be a pretty big upside surprise. And if we had a sting in next week's inflation data, then you might start to get people talk about it more. but I don't think a near-term rate hike's on the cards. Right now, it's already been enough of an adjustment to move from that sort of cutting cycle, easing bias into this territory where they're saying, oh, we're definitely not cutting, we're on hold. It's a question of what we do next. And really, as Mary Daly said there, they're going to have to wait and see how the data plays out for that.
Our Fed and Economy reporter, Enda Curran, there in Washington for us. Let's take a little bit more of a listen from that exclusive conversation with the San Francisco Fed President Mary Daly at the Bloomberg Tech event.
What I think of it is as, sure, it's possible that businesses are looking for cost savings and they hire fewer workers and they do just as much because they're using, an LLM assistant to help. But we just haven't heard from businesses that they're seeing transformative ongoing productivity gains yet. And they want to always underscore yet. And so then I said, well, what's the time frame? And they said next year, year after, because what we know is it isn't just about getting a model and using it for things or an agent. It's about transforming your business processes so that you really take advantage of things we don't even think about today. What can be done differently that will transform the economy? So that you can definitely find a single business or sectors who are using it and seeing the gains, but we haven't seen that across the economy going forward. But I'm pretty bullish. I see the possibilities, and I'm hearing more and more that people are seeing early rewards and really recognizing that next year is the litmus test.
Look, so you've kind of established where we sit right now. Inflation continues to rise. How likely or unlikely would that make a rate cut in 2026? How do you tie the two together from this juncture onward?
I think one of the questions I get asked regularly is what's the path for the rates going forward?
Yeah.
And the answer I give, because this is how I really think we have to think about it, is we don't know how the economy is going to play out. We have, as we've been talking about, this tremendous possibility with AI, but we have at the same time the war in Iran that is with an uncertain end, which has pushed oil prices up and fertilizer prices, which have filtered into food prices. And right now, those are fairly contained. And if you look at the futures market for oil, it's $80 a barrel by the end of the year. But, we have to think about that. And so right now, policy's in a good place. We are prepared to respond either way, whatever the economy brings. But I think giving more forward guidance about what's possible could be misguiding in the end, because we just have to wait for the economy to evolve. Everybody wants to resolve the uncertainty today, but I think that's a mistake, because it will close off our mind about what we really have to look at.
San Francisco Fed President Mary Daly there speaking to us on the sidelines of the Bloomberg Tech Summit in San Francisco. Actually, we'll have more coming up on the Asia trade. We're live at the summit with Broadcom CEO Hock Tan following that big stock drop as its AI outlook disappoints. This is Bloomberg.
I think we're doing very well, but we're going to see if we're going to win one way or the other. We're going to win on paper, or we're going to win military. One way or the other. It's going to be militarily or on paper.
Well, President Trump continues to claim a deal with Iran is close, even as Tehran says talks have stalled. And Iran-backed Hezbollah has rejected a truce between Israel and Lebanon, with the Lebanese health ministry reporting at least 8 people killed in the latest Israeli strikes. Let's get more with our senior White House reporter, Mika Solna. So, Mika, all evidence seems to point to this stalemate continuing, or even a worsening of the situation, but the president is still saying that, soon, over the next week. Previously had said perhaps even a deal by this weekend.
Yes, absolutely. I mean, we are seeing this conflict go on for 4 months now after the administration initially promised about 5 weeks for a conclusion into their military operation in Iran. And as we can see, the talks are extremely fragile right now. And now the U.S. is trying to work simultaneously to try and also broker deals between Lebanon and Israel, which complicates things to a great extent. And I think the president drew a red line today, saying if U.S. troops are attacked, then that's going to continue the fighting. But right now he says, things are still making progress in his view.
when it comes to this tentative deal between Lebanon and Israel, there were already a lot of questions when it was announced by the State Department yesterday, right? Because Hezbollah's buy-in was dubious at best, and we've heard, perhaps unsurprisingly, that they don't want to be part of this.
Yeah, absolutely. And then the president and we also heard from Secretary of State Marco Rubio saying that those diplomatic talks are happening between the U.S. and Hezbollah through Lebanese officials. So again, I think that this it goes into this broader picture here of how fragile, how complicated this process is to engage in these talks and solve multi-level conflicts in the Middle East right now that the administration has become entangled in.
How much domestic pressure is there? We've sort of talked about this at length, but the president almost seems, if not indifferent, at least comfortable with the speed at which things are progressing, despite domestic economic pressures, the price of gas, going into the summer driving season, getting ever closer to November midterms. Is this because of that situation where someone's saying that he's essentially already a lame duck president?
You know, the president was asked about this today in the Oval Office, if the domestic concerns are a factor in the way that he's approaching these negotiations. I think the White House is extremely concerned privately about the state of the economy. I mean, we are seeing President Trump's polling numbers. His approval rating continues to fall. I think some polling is showing it's high 30s, below 40%, and 5 months out from the midterms where the president really has to have Republicans hold the House. Otherwise, his legislative agenda is essentially out the window. So I think it's a really, really big factor whether or not the president is going to publicly say so or not at this time.
You know, he's getting pushback, of course, in that House vote against the war. At the same time, his foreign policy ambitions don't seem to have been limited, right? He's saying that he'll handle Cuba after the Middle East situation is sorted.
Yeah, and we're seeing increased pushback from the Hill, I think, when it comes to the president's actions, not just in the Middle East, but around the world in terms of how is the administration communicating with Congress that has historically had a say when the U.S. gets involved, takes military actions around the globe. And we saw this with Venezuela. We're seeing this now with Cuba, as you just mentioned, and of course, Iran. So very interesting to see that House vote is a huge rebuke to the president. Of course, the president called out the 4 House Republicans that voted to try and curb his powers to continue this operation. But it is also a sign of the growing frustration we're seeing from members of his own party on when is this actually going to end.
At the same time, we're also seeing the president rebuilding his other key campaign platform, right, which is to rebuild the tariff wall. What are we seeing here, you know, at a time when clearly the president has a lot on his plate at the moment?
Yeah, there is an endless agenda of things to do, but I know that tariffs are a close issue to the president. I know that this is something that he has really, promised on day one. Of course, he has had blowback from legal challenges from the Supreme Court. But again, the White House really has to factor in how is this going to impact people's pocketbooks right now at a time when there's a lot of economic struggle for millions of Americans out there.
Bloomberg government senior White House reporter Mika Solna there in Arlington. More ahead on the Asia trade. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Gearing up for the latest jobs report.
Why do we see nothing but doom and gloom on jobs? The last 2 headline reports from NFP have been really, really strong.
Today, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Things really are not deteriorating in the labor market. Will we see firms have a smaller footprint when it comes to employees?
The May Jobs Report, today on Bloomberg.
This is in many ways a year where all of the labs are dramatically scaling up their models, and we are on, we think, a much faster trajectory to do so.
Meta's Chief AI Officer Alexander Wang speaking at the Bloomberg Tech event in San Francisco. We also heard from Anthropic's co-founder and president, Daniela Amodei, saying that the high cost of developing artificial intelligence models is driving firms to look to the public market for capital. She spoke to us exclusively again at the Bloomberg Tech Conference in San Francisco, just days after the Claude maker filed confidentially for its highly anticipated IPO.
Yes, you're correct. We confidentially, filed our S1, and that gives us the option, to potentially go public after the SEC review. Unfortunately, that's all I can say about anything IPO related. I'm sure you understand.
I mean, if we can just maybe level up a little, what is the calculus for a kind of an AI company generally to go public or not in this moment? What are some of the pros and cons here? Because on the one hand, yes, you can access more capital if you're not a startup. But on the other, then you're beholden to quarterly results, shareholder calls, et cetera. So what are some of the pros and cons just generally for an AI startup, do you think, to go public in this moment?
So I think, at least speaking for, ourselves, and I think ideally, probably really for the AI industry more broadly, it's a very capital-intensive business to train AI models. I think that's something we've been, very open about from day one. I don't think that's, a surprise in the industry. And I think this kind of concept of how do you access the level of capital that you need to train these models, right? It's a really big kind of upfront cost to train the models and to serve inference on them. And I think that is, my guess is that, over time, the sort of core set of companies that are working to advance the frontier are just going to need access to capital. And I think the public market is very well suited to that. So there's obviously, of course, trade-offs, but my sense is there's just a fundamental structure of how training and kind of serving these models for customers works, that it will require that level of access.
Anthropic co-founder and president Daniela Amodei there speaking to us at the Bloomberg Tech Summit in San Francisco. In fact, let's head over there right now because we're hearing now from the Broadcom CEO, Hock Tan.
How concerned you might be about Google sort of taking more of the chip development and design process in-house. The term customer-owned tooling, is that something that keeps you up at night? And are there any provisions that you've built into your partnership with them that sort of might preclude that?
Well, that's something we should expect in technology, and we've been in semiconductors for over 20 years. In fact, that's how long I've been doing this with Broadcom. That's what we do every year, all the time. We have multiple product divisions, each of which we are the best in what we do. And we just keep investing. And essentially, you try to out-engineer any competition. Customer-owned tooling that Google is trying to create, which is trying to design it themselves, with the help of perhaps some smaller partners, like
Marvell, maybe?
MediaTek, like that. I call them kind of like ankle biters. But they're working for Google to try to achieve customer-owned tooling. So we just compete against my own customer in a different part of it. Right. And the whole idea is to be able to create differentiated product and technology that beats what they have. And all this is very nice. It's been helped by the fact that the competitor, the real competitor facing all this, is the GPU out of NVIDIA. And as long as NVIDIA keeps coming up generation after generation that is superb technology, Google has to create very equivalent technology to match that. And that's where we come up.
Right. The TPU process, it's quite involved, and I'm wondering if there's anything that Google and that anything you can do to help Google democratize that process a little bit.
How do you mean, democratize?
Just in the sense of, making TPUs more accessible to mainstream developers and not just the elite AI labs.
Well, I think Google is trying to do that by making available that TPU environment through cloud, Google Cloud, GCP. But a big part of that is the software. the operating system, the software, the compilers that go with it. And that's very much in Google's purview. Of course, we'd like to help, but I think they got that pretty much under control in terms of trying to push that program.
Yeah. I want to talk a little bit about Anthropic and the ways that these foundation model builders are obviously in great need of capital in order to finance their needs for chips and the compute that are needed to build and develop. Can you talk a little bit about the way that relationship is being structured and financed and the provisions that you are having to take to kind of protect yourself against downside? How concerned are you about the end user demand materializing and enabling them to meet their commitments?
Frankly, I think in this particular case, we were partners with Google to provide compute capacity through TPUs, which we co-designed with Google, to Anthropic. And frankly, there's no shortcut about it when we first started almost a year ago now, which is basically is a leap of faith that Anthropic and generative AI and Anthropic, through its business model of addressing enterprises with code assistance, coding tools, would make a difference. We went in on that leap of faith, and I guess to date, that was a great bet.
They do seem to be in the very ascendant at the moment, given their, the fact that they have leapfrogged ahead of OpenAI on their valuation, filing confidentially for an IPO. So have you not had to worry about, have you not had conversations with investors who might be worried about you getting left holding the bag if things don't materialize the way Anthropic anticipates them?
Well, as I said, we were making a bet on Anthropic. We've been, us and Google too, jointly doing that. And I guess we're not just making a bet on Anthropic and its business model. We're also making a bet that generative AI would be something that would take off in a fairly substantial way, particularly among enterprises, the way Anthropic goes. And sure did. And there's pretty good reason for it. Though when I started a year ago, I know probably a fraction of what I know today. And what I know today, it would be a fraction of what I'll know in 6 months' time. These things are changing very fast. But the tools we see coming out of a company like Anthropic, and the same applies to OpenAI and Gemini out of Google, they are just phenomenal in a sense what they can achieve to help productivity. In Broadcom, we use it. We use those tools for engineering, design, code assistance, and it's pretty remarkable what can be achieved in terms of enhancing productivity, more than enhancing productivity, I think even making products, designs that are probably better than you do it with our engineers. And these are very good engineers that we have.
Talk a little bit more about how you're advising your staff to use these different tools, and have you found yourself having to put limits on that? We hear about the era of token maxing, which I hate that term, but the idea of letting people just use without limits tokens. Have you had to put limits on that, and what does that look like?
No, we don't. Frankly, on a bigger picture, we aren't at that stage yet. So maybe it's because we're behind other guys who got to that point and start to throttle on what they do. Yeah. Now, a big part of it is when you use a tool like Opus 4.7 and the engineers start using it, they go through a learning process, even how to use it. You can't get a tool to be very productive at the start. But as you keep using it and you use it long enough, you get very good at it. And then the tools become much more productive. And as you get much more productive, just think about it. You can get one very senior engineer to produce an application design in 1 week, what it would otherwise take 10 engineers, which we pay at $300,000 a year, and take them 3 months to produce the same thing. The return on investment is still pretty compelling. So to say we're throttling probably is a question of a return on investment and what application you're using. But it is. It's also been able to be trained to be able to use it better and better.
Last year, you announced a landmark agreement to work on AI chips with OpenAI. Could you give us an update on where things stand in kind of bringing that to fruition, in particular addressing what another publication wrote about maybe some snags there, and you're wanting Microsoft to agree to buy a certain percentage of the chips. Just how are things going with finalizing that agreement?
Oh no, this, by the way, creating chips with partners. Best example, you said earlier, my great relationship with Google. While they try to do custom-owned tooling, it's very, very friendly in a way, and we all have the same goals, competition. We have a great and deep partnership with these guys, as we do with any other, most of our customers, I call it. But it's a journey for them. So the first generation of chip would tend to be replaced by a second generation, which gets better and better and better. So for them, it's a journey towards creating custom AI accelerator silicon to basically optimize on a workload to replace what is the de facto now, which tends to be NVIDIA. We do that, but we only have a few customers, to be exact, 6. Yes. Each of them on a journey, at different stage of the journey, towards creating their own silicon, which they will use. And obviously, Google is way ahead in being much earlier. OpenAI is one of them we've engaged with, and we've engaged now with 3 in over 2 years. It's pretty remarkable how much they've achieved because we have the AI accelerator silicon working very well in their labs, in their data centers, and we're on track to go into production late this year. And that's it. Off we go to the races.
So there's nothing holding back that partnership at this stage, whether it's needing Microsoft to make any kinds of agreements or anything like that?
No, not at all.
Great. I want to talk about M&A because historically, Broadcom has used M&A in a relatively substantial way. Does the AI revolution sort of temper the need for you to supplement growth using mergers and acquisitions? Are you kind of entering a post-M&A phase, or is that the wrong way to think about it?
No, you hit it right on, Tom. And it's an interesting question. It's a very valid question because it crossed my mind and that of my board on an ongoing basis, not regularly, as do we do M&A. So I'll be very flip and give you a straight answer. In the last 2 years, between 24 and 26 this year, I would be doubling my revenues. I would create over $50 billion per year, annualized, on revenue. I'm looking around, what can I buy? They even come close to that. And that's the tricky part. I mean, it's a distraction. All M&As are distraction to acquire, go to regulators, a further distraction to integrate. Another year. Meanwhile, organically, this phenomenon we call generative AI and our ability to ship them picks and shovels, the compute capacity into this demand, which is almost insatiable, makes it very hard to choose M&A over focusing and succeeding in generative AI compute.
Is there any area where you think you might want to sort of make an exception to this, whether it's maybe photonics, just to name one area?
Photonics? Or you mean optics?
I'm just throwing
anything.
out... Yeah.
we ran a business. I ran a business model 20 years. I tried to, very hard, I know, try to avoid bright, shiny objects.
All right. I want to ask you some of the same questions that I've asked some of the other keynote speakers about, when you look at the price sensitivity around token usage and the price sensitivity around, when businesses are prioritizing spending on this, we've seen a lot of companies start to kind of cut back on throttling use of tokens, et cetera, as we talked about earlier. We've also seen indications that certain Chinese large language models are starting to gain a lot of traction, particularly given how efficient they can run, whether it's DeepSeek, the list goes, Alibaba's, Khoon. Are you seeing that at all from your vantage point?
From what I've heard, I can't say we're doing it here in Broadcom, but what I've heard a lot of, and I assume you hear from the same source, a lot of company leaders, CIOs of companies talking about, hey, we're trying to find ways to reduce token costs and all that. And maybe they are ahead of the game where we are. But my sense of enterprise usage of AI, we're still at the early innings of this game. And I think we're still trying to learn what we can get out of this phenomenal tool that we have created and continue to enhance and improve with each succeeding generation. So from my personal viewpoint, as I said earlier, and from the experience running at Broadcom, I don't want my guys to go nuts overspending on tokens. But on the other side, if you can create value out of it, and that you have a return on investment that you otherwise could not, why stop? And this is not going to a video arcade when we are kids and play a game, and at the point when the monster is about to eat you, your gun run out of ammunition, so you feed more tokens. It's almost this, but it's not quite.
I'd be remiss if we didn't talk about the other businesses that Broadcom is known for, and networking in particular. Your gear has become, increasingly important to the modern AI era. We're starting to see other companies like Cisco wanting to kind of play in the areas that you have dominated. And I'm just curious what you think of the prospects for them to kind of, create competition for you there.
Well, we do business in we're very fortunate. I use it very truthfully, not tongue-in-cheek. We have been in semiconductor for 20 years, and we have accumulated a portfolio of about 17 semiconductor product divisions in specific core areas, where we are literally number one or we're not in. We're number one and we continue to invest. And about 5-6 of those divisions happen to be very important in creating AI chips and AI clusters.
Right.
So it all became that way. And one of them is networking, as you say, for switching gear. And that's taking off like a rocket. But we also try to be, as we always have been when we sell our products, to be very, I like to call it strategic. When we look at the customer, are they using for a particular purpose? Are they sustainable? Do they want not just one generation, the next and the next and the next, sustainable? And so we prioritize our products to those kind of strategic customers. And demand, as I said, for AI and AI networking today is just massive. So it's okay for us that with such strength and the way we look at businesses, the overflow, I'm happy for it to go to Cisco.
Well, I could pepper you with a lot more questions, but I'm afraid we've run out of time. Hock, thank you so much for being here.
Thank you.
Thanks for your candor. Thank you so much.
All right, that was a great conversation there as we hear from the Broadcom CEO speaking at the Bloomberg Tech Summit. Lots to mull over, particularly given the shadow that those Broadcom numbers and the outlook has cast over this broader AI risk rally. Speaking of which, take a look at how we're trading at the moment as we head into the start of the day here in Asia. New York traded crude looking pretty flat at this point as we continue to mull over these considerations when it comes to the stalemate over the ceasefire, Hezbollah refusing when it comes to this Israel, US and Lebanon brokered ceasefire there, and that broader ceasefire, those discussions, according to President Trump, continuing, even though Iran saying that they have now stalled with the conflict and tensions now being escalated. When it comes to Japan, this is set up for the Nikkei 225, which is about 15 minutes away from the start of trading there, down by just about 0.5% there. We are watching for that steady rotation when it comes to flows away from the South Korean market, which of course has rallied so hard, so fast and in such a concentrated way, and potentially seeing more of that beneficiaries coming through from the Japanese market. The yen is sitting at around that 160 level. We're now watching for potentially whether the Bank of Japan might actually move sooner rather than later this year. S&P futures at the moment softer by 0.3%, Shery.
Yeah, Heidi, of course, we continue to watch the rotation potentially here across Asia as well. We saw that big rotation out of tech into U.S. financials. But the sequencing, of course, of some likely IPOs to come will be so important for the tech trade, right? Starting with SpaceX, it set out its IPO pitch to retail investors with a video in which CFO Brett Johnson joins the dots between the company's rocket, satellite, and AI businesses. The 17-minute long presentation is part of the company's efforts to attract mom-and-pop investors from around the world. Let's get more on that with U.S. Deals editor Michael Haitha. Michael, so how is the marketing going now for SpaceX? I mean, the roadshow must be massive right now.
Oh, it's massive, interesting, and quite different, really. I think the biggest thing to think about right off is just the scale of it. As everybody knows, it's now going to be a $75 billion raise. One thing that's really different about it is that 30% of the shares are being set aside for individual, also known as retail investors. And that compares to a normal average of about 10% for an IPO, even large ones. So we're talking about, 167 million shares being bought by individuals, about $22.5 billion worth of stock. And that takes a lot of selling to get it out there. And one of the things that's come up, of course, is the banks, the underwriters for it are in overdrive on this one. But just a few minutes ago, Jamie Dimon finished a simulcast interview with Elon Musk himself, talking about all the plans that Musk has for the company. And that's not something Jamie Dimon normally does from JP Morgan. The other banks are scrambling too. We've got there's this whole jockeying among the underwriters. Goldman Sachs has put up these silver rockets that look like SpaceX Starship rockets in its lobby. Morgan Stanley has SpaceX branding all over its lobby. David Solomon from Goldman is coming in and saying that, oh, by the way, they were first and boasting they've been the longest involved in all this. So it's quite interesting, and it's quite a lot of wrangling about which bank is going to be the biggest participant in all of this.
Yeah, I mean, this must be really a big bragging rights for these banks. What exactly is SpaceX pitching to investors?
Oh, you mentioned the CFO's presentation, that 17-minute, which very, very polished history of SpaceX and its future. And they are really selling the stars on this one, starting with some of the original business. The SpaceX business itself is probably the best known and is very successful, very dramatic. They're launching a lot of rockets and doing it very successfully. Also, the Starlink business, perhaps less glamorous in a way, but that's what the rockets are going up with. And it's quite a constellation network in space right now, and they are a primary provider of satellite communications. The future is a little bit more unclear, and that's where they make that transition. For example, in that video, the AI portion, which of course is the cash burning aspect of the company right now. They're developing data centers, And that gets played into the next phase, of course, our future of having data centers in space and all of the technological innovation and capital expenditure requirements that will take. And of course, the pitch ends with colonies on Mars, right? Starting with the moon. There's a provision in the incentives for Elon Musk where if they get 1 million people in a colony on Mars, he gets a rather large reward for that.
Michael Haitha, really good to get your insights on SpaceX, editor on U.S. deals with, of course, this very much anticipated IPO. Much more ahead. This is Bloomberg. We had huge rotation in the overnight session on Wall Street where we had the Dow outperforming the Nasdaq by more than 1,000 points. In fact, we were headed towards financials gaining ground in the overnight session. Really with that disappointing outlook coming from Broadcom, that AI trade, anything around tech, semiconductors lost ground in the overnight session. So this could be a big theme to watch in the Asian session as well. Let's discuss all of this with Bloomberg Markets reporter Anthony Stevens now watching all of the moves for us in Hong Kong. What will be key today?
Yeah, so we saw a little bit of a pullback in tech on the Broadcom guidance, right? It's important that it was the guidance. So now you see that the bar to further tech gains require very aggressive forward guidance from these companies. But the results are quite strong. So what's happening in the US is this dynamic of broadening economic gains. So people are not selling the headline index per se. They're rotating into industrials, into banks, other beneficiaries of the kind of growth that the US is seeing. So the banks have, the bank index still has not regained its new high on the year. The Dow Jones did crack on to a new high. So you can see the cyclical rotation has plenty of space to go. In Asia, we have a very similar concept with the Topix Banks Index lagging big cap tech by quite a bit, despite benefiting from a steeper yield curve. So probably on the Asian session today, we will see Japan banks do quite well. And we must remember, because of years of expansion, Japanese banks are quite exposed to the US markets now and the US economy. So they tend to benefit. Korean banks have also lagged Korean tech a lot. Korean banks are obviously quite exposed to the improvement in the Korean economic situation and the yield curve there as well. So we will probably have this decent round of rotation in Asia as the market cycles higher.
What are you watching when it comes to FX? Are we looking for that dollar-yen to take another leg higher?
Look, it's not just the dollar-yen, right? Literally the entire region, north to south, is on intervention watch. So we have the yen, we have the Korean won in clear air now, getting record weaker. Indonesian rupiah was record weak yesterday and broke a new big figure at 18,000. And the Indian rupee is also struggling to find a level. What's very interesting about the Indian rupee is we have the RBI on deck today, and their commentary around the rupee and what they can do about it while holding rates is going to be super interesting. So Asian policymakers here have a lot to look at ahead of the non-farm payrolls in the US today. Now that number becomes extremely vital to Asian FX because any strong number, and there have been some private indications that the US labor market is fine, any strong number will put even more pressure on Asian FX. And that matters to the vast majority of the Asian population, way more than what tech stocks are doing.
Bloomberg's market reporter Anthony Stevens there with what to watch on the markets. And Anthony said that we are watching for those U.S. non-farm payrolls. We'll be watching dollar strength as well. In the overnight session, we had the greenback a little bit softer on lower oil prices, offsetting those Fed rate hike expectations. But of course, we continue to watch that potential intervention from authorities, as Anthony mentioned. In South Korea, we just heard again from Korea's finance minister, Khoon saying that the government is responding with heightened vigilance. You can see the Kospi futures now pointing to downside of almost 4% right there, and Nikkei futures also pointing to downside of 0.8% at a time when we had seen the Japanese yen now at around that 160 level against the US dollar. Very politically sensitive topic, Heidi, when it comes to the weakness of the Japanese yen, especially since authorities spent more than $74 billion earlier this year to support the currency.
Yeah, let's take a look at how we're watching the broader commodities complex, because, of course, we continue to have really a lack of progress when it comes to the ceasefire talks between Iran and the US. And, of course, Hezbollah rejecting the ceasefire that was brokered between Israel and Lebanon, throwing further complication into that mix as well. Oil is pretty steady at the moment, not really doing much after the first decline this week. That optimism clearly starting to fade a bit, but President Trump still saying that the talks are going well. Iran saying that they're at a stalemate at the moment. Gold is also trading pretty steady at the moment. We're also watching European gas prices. They're falling as we continue to see concerns staying focused on enough supply ahead of winter.
This is the Asia Trade. We're counting down to Asia's major market opens after that massive rotation that we saw in the overnight Wall Street session. Haidi, really from tech to financials. But this, of course, after the Philadelphia Semiconductor Index already rallied more than 90% year to date. We did get a little bit more caution given Broadcom's softer guidance.
Yeah, the question is whether this is kind of the start of a trend, the proper sort of broadening of this market and the rotation away from just such highly concentrated trade, right? Particularly when it comes to markets like Korea, like Japan, like Taiwan as well. Are we starting to see a little bit more of a broadening in this market? But still, of course, geopolitical concerns still very much at the forefront there as well. We've also got US jobs numbers to contend with and some worries about more Fed tightening on the agenda too.
Yeah, plenty for markets to digest. But on that rotation, to your point, Heidi, when it comes to Japan, we'll be watching the Topix Bank Index as well because it's already at the highest levels since February. Take a look at the open right now because the Japanese yen still holding at that 160 level against the US dollar, despite the fact that authorities here have spent more than $70 billion earlier this year to support their currency. We have just heard from Finance Minister Katayama saying that she will refrain from commenting on the FX levels, but at the same time, she talked about not clearly having a direction when it comes to those sales tax cuts when it comes for food here in Japan. But at the same time, she said that they will not be using more debt. So do watch out for JGBs, the 10-year yield holding at that 266 level. As the Nikkei and the Topix, a little bit of divergence, as you can see there, with Nikkei stocks falling 0.7%. And as I said, do keep an eye on those banks. And of course, we did get some wage growth data earlier this morning, and we saw them beat all economists' estimates. So we will be watching the June 16th Bank of Japan policy decision. The expectation is that they might hike from Bloomberg Economics. Take a look at how South Korea is also opening because, as I said, we had that pressure when it comes to the tech sector. So we'll be watching names like Samsung, like SK Hynix as well. The Kospi now falling more than 4%. And this as we also got the current account surplus narrowing slightly for the month of April. But this, of course, after touching record highs already in the previous month, given all of the semiconductor exports. The Korean won still weakening past that 1,500 level against the dollar, Heidi.
Take a look, Shery, at what we're watching when it comes to the outlook in particular when it comes to oil, right, as we continue to wait for further progress on these geopolitical discussions. Pretty steady at the moment. In fact, not much of a move at all. The first decline that we've had in this week, though, on that optimism between the US and Iran holding these talks, that tentative ceasefire between Israel and Lebanon, of course, which has been pushed back upon by Hezbollah, potentially this optimism that we'll see energy flows resume through the Strait of Hormuz. But the reality seems to be that we're quite far from that, despite President Trump saying that the talks are continuing to go well. This is a picture when it comes to treasuries. We also saw that rise in the overnight session with the dollar slipping as investors drawing on those prospects for a peace deal. But those yields have been pushed lower by 2 to 4 basis points, really across maturities, as we saw that slide in oil as well. But of course, we're setting up for non-farm payrolls in the US, a whisper number looking a little bit higher than what we had been previously expecting, and whether or not that's going to set up for sort of more heightened expectations for sooner than expected Fed tightening as well. So Brent crude at the moment, we're seeing coming online just about 0.2% higher with that trade. And Australia, just a couple of minutes into the start of the session, taking a very slow approach there, despite futures showing a little bit of a gain of about 0.5% at the open. Let's bring in George Boubouras, who's the Managing Director at K2 Asset Management. George, really great to have you with us. So there's so many sort of cross currents as to what's going on at the moment. But let me get you started on the tech view. Is this a true sustainable rotation that you think we're starting to see, given so many questions have been asked about the concentration of this rally and the loftiness of valuations?
Yes, good morning, good to be with you. Yes, we believe the broadening out is the trade. We, like many active managers earlier this year, broadening out, looking for that opportunity from AI, the tech sector, with the benefits of productivity in utilities, healthcare, broadly financials, and other parts of the economy. So we are looking at that mid-cap broadening out and obviously the other key sectors. Now with the concentration, the thing to reinforce here, this is an extraordinary time, I think, in financial market history, but these earnings have been so significant and historical. The E is coming through the denominator and the P is just matching it. So just to reinforce is that it is extraordinary what's happened, but these earnings are extraordinary. There is, while you can't say there's crowding out within the private sector, it's really a public-private sector debate. But within the private sector, there is this concentration of finite capital going to the equity part of that investment, and obviously all parts of the capital structure, because debt issuance is dominated again by chip making and AI and obviously equity returns. But the earnings are coming through. They are historically high. It is matching the P, so the multiples are justified on this extraordinary earnings. Therefore, having said all of that, it seems logical and consistent that broadening out has got some benefits for the broader economy and that productivity gain that you're looking for in the US and other parts of the world. So hopefully that narrative makes a bit of sense from an investment point of view.
George, what are your thoughts when it comes to this pipeline of mega tech and largely AI-centered IPOs, right? Obviously, SpaceX, OpenAI, Anthropic before that. We also have the massive fundraising by Google. Do you think it's meaningful for markets in terms of being a test of liquidity and of investor commitment to the theme?
Yes, in short, and just reinforcing the following. The upcoming IPOs is going to continue the trend that is quite historical, and that is equity participation's increasing. The whole globe is all in on US equities and US AI and US chip making and those earnings that are coming through. The whole debt issuance platform is dominated by that sector at the cost of possibly sovereigns and some municipals, but definitely other senior unsecured debt issuance. So there is, again, reinforcing finite capital in the top part of the capital structure to the bottom has been allocated to this sector. The diversification is happening, it's been happening for 6 months or so, and some even longer for some. But it's going to attract more new capital that's chasing this, or the beta component. So this trend seems to continue for now, and many active managers will continue to take some profit where they can, and again, do the broadening out trade to the mid-cap, broadening out trade to the other sectors, or other asset classes for that matter.
We, of course, have these markets across Asia that are very heavily concentrated on big tech names. And then at the same time, we have the ones that don't have that much tech exposure, that have lagged behind this incredible rally that we're seeing globally. Could we see any more diversification or broadening out in terms of different market regions? Because we have seen the likes of, say, Indonesia, the likes of India, for example, being some of the worst markets performers right now.
Yeah, no, good to highlight those. So from our perspective, on retracement, we like Nikkei, we like Kospi. It's been a real volatile run with the Kospi, and that rally's been historical year to date. We like Singapore, it's that hub, and Australia because it's got that larger oligopolistic earnings coming through, the high payout ratios and the dividends coming through. Specifically in Indonesia, that it continues to be a short for Indonesia, that currency weakening, flight of capital. They just need to get reform consistently. They need to go on top of their reform from an economic perspective for the long term. It's just not happening. They keep disappointing investors, and they're obviously exiting onto the sovereign market from Indonesia. So that short to Indonesia will be maintained until they can get on top of some meaningful economic reform in there. Having said all that, it's a great country, of course, and with that weakening currency, the tourism sector will be the big beneficiary of it. But from an economic point of view and an investment point of view, from a debt or equity, Indonesia is not the place to be. Similar to India, it's just not the place to be searching for those returns. They just need that more broad-based economic reform and or access to some key tech sectors of those earnings. And on the debt side, can't find a positive story to be going overweight India. But nevertheless, Southeast Asia, there is opportunity, in North Asia. But just to reinforce, we prefer where you can Nikkei, Singapore, Kospi on retracement, and Australia as an index weighting.
George, you're talking about a great time, a good country to go to. Well, that's been the play here in Japan as well. We have so many tourists and a lot to do with the weak Japanese yen. In fact, the finance minister Katayama speaking right now saying that they're looking at the oil-related impact on currencies, that it's large. She keeps reiterating that, but at the same time, of course, we're watching for potential intervention given that we're at that 160 zone. Is the future of most Asian currencies just more downside at this point, given just the fundamentals with positive surprises coming from U.S. economic data, safe haven plays, even South Korea, such a strong market right now, and you have the Korean won way past 1,500?
Yeah, very sympathetic to the theme of that question. Let's put Korea aside because of the capital controls and QF2 status, but let's just go straight into Japan. They've obviously made it clear that 160, that intervention. So the framework I'd like to roll out is that there's structural weakness for the yen to continue with pockets of intervention to prevent that being just a one-way. So intervene at that 159, 160 level, get it towards that 156, intervene again until it structurally gets weaker over time. Given that they remember the BOJ would still like to somehow continue to maintain the narrative and to deliver higher nominal rates from the cash all the way out to that 2-3 year. So on that framework, which should be supportive of it, but there's many other moving parts. So structural weakness for yen, with more yen intervention to prevent that being just a one-way play. But this time next year, still see a weaker yen, but bouts of rallying, lots of periods of that going forward. And that's a theme for all parts of capital structure, all asset classes. More pockets of volatility are the norm for active managers right across the place, right across for geography, by capital structure, by asset class, etc. More pockets of volatility, but structurally weaker Asian currencies with rallying and small pockets of that in the short term.
George Boubouras, really great to get your insights. Managing Director of K2 Asset Management, as we continue to watch all of the moves here in Japan, because Prime Minister Takaichi is also speaking in Parliament right now, saying that the economic fiscal policy is not targeted at the currency itself, that the investment strategy here in Japan will actually help maintain trust in the Japanese currency, according to Prime Minister Takaichi. This coming on the back of comments also by the Finance Minister Katayama that the macroeconomic policy is among factors affecting FX. Of course, we are expecting a rate decision by the Bank of Japan on June 16th, and right now market pricing implies more than 80% odds of that June rate hike. And with that, we're actually seeing expectations of perhaps more gains for these banks on rising rates. You can see right now on top of that, the Topix Bank Index trading at the highest level since 1997, being helped also by that massive rotation that we saw in the U.S. session out of tech into financials. More ahead, this is Bloomberg.
I think we're doing very well, but we're going to see if we're going to win one way or the other. We're going to win on paper, or we're going to win military. One way or the other. It's going to be militarily or on paper.
Well, President Trump continues to claim that a deal with Iran is close, even as Tehran says talks have stalled. An Iran-backed Hezbollah has rejected a truce between Israel and Lebanon, with the Lebanese health ministry reporting at least 8 people were killed in the latest Israeli strikes. Let's get more from our senior White House reporter, Mika Solna. So, Mika, two kind of fairly different realities that we're looking at here.
Yeah, absolutely. I mean, there's a lot of confusion and mixed messaging right now in terms of where things actually stand when it comes to the timeline of this U.S. military operation, this war in Iran, waged by the Trump administration. Of course, we heard the president say today, and it continues to say, that strong progress is being made to end this operation and complete it. And then soon this will create a boom from the economy. But we're also hearing from the Middle East that there's nowhere near a deal. So I think it's a lot more complicated than what's being put out there.
Yeah, exactly, especially since Lebanon remains a key sticking point, and it seems that ceasefire might not be holding.
Yeah, Lebanon certainly complicates things given the fact that the U.S. is trying to broker essentially simultaneous peace deals now. And I know that Hezbollah has rejected the ceasefire agreement between Israel and Lebanon. And though Hezbollah is not an actor in the peace talks waged by the U.S., they still matter because they're backed by Iran, as we know. So this really, puts kind of a wrench into things. I think that this is going to complicate things a little bit more in terms of getting a quick peace deal done here. So right now, things are still in flux as this war wages on for more than 4 months now.
Are there any indication that the president is feeling the heat domestically?
Yeah, I mean, there's still a lot of Americans out there that are feeling the economic pressure. The gas prices are still high. They've come down a little bit, but they're still very much in flux here. And other consumer costs, I mean, fuel prices, people that want to travel for the summer, they're really going to feel this in their pocketbooks. The president is going to go out to Wisconsin tomorrow to campaign with a House Republican. So he's going to be hitting the trail. We should be hearing more from him on that front and maybe get another update on where things stand then.
So what's next in the ongoing negotiations then?
I think that we may see more this weekend. We'll definitely hear more next week. But I think things have really remained kind of at a stalemate for the past week or two after there was some momentum that the White House was seeing, saying that this was probably going to wrap up very quickly. But I do think that this is a lot more difficult to get done right now with the president really not letting down on his demands. The ceasefire is existing, but there's still missile strikes, as we know, so it's very, very fragile. So every day we're waiting for updates from the president. He's pretty much spoken on it every day since the start, but we'll continue to monitor things as they unfold.
Mika Solner there, Bloomberg government senior White House reporter joining us from Arlington. And here's another conflict that we're watching right now. Ukrainian President Volodymyr Zelensky now saying that he proposed peace talks with Russian leader Vladimir Putin. Zelensky made the offer in an open letter saying Ukraine is ready for a full ceasefire during negotiations. Putin has already pushed back at separate efforts by European leaders to help negotiate an end to the war, saying they cannot be mediators when actively supporting Ukraine. President Trump, though, has welcomed Zelensky's initiative.
I'm glad that they're maybe talking about meeting. I think we had a lot to do with it. I know exactly what you're doing. But I think it would be great if they met. They should get it done.
Silicon Valley's top-value defense tech startup says it's expanding production of AI and autonomous weapon systems for the U.S. military. Anduril Industries co-founder and executive chairman Trae spoke to us exclusively at the Bloomberg Tech Conference about how the industry is evolving.
We have this defense ecosystem that's dominated by a handful, 5 or 6 large defense companies that have been, kind of a consolidation of the entire defense industry that existed during the Cold War. And the capabilities that we have are really incredible. I mean, we have these amazing, exquisite defense systems like, Ford-class aircraft carriers and the Joint Strike Fighter, the F-35, the Patriot missile. These platforms take decades to develop, build, and hundreds and hundreds of billions of dollars to sustain. So for example, like a Patriot missile, which was initially developed in 1969, this is like kind of the creme de la creme of interceptors for counter-air capabilities. This is like it's a 70-year-old system at this point, Every missile costs millions of dollars, literally like between $2.25 to $5 million
on a per unit basis.
Per unit basis. And these were built to shoot down MiG-29s. You know, when you're shooting at an airplane that costs tens of millions of dollars, you can afford to shoot a $3 million missile to do that. This is not the nature of threats as they exist today. And so Anduril, when we came on the scene, our goal was to figure out ways that we can introduce software, autonomy, on the production side of the house, as well as on the kill chain, the tactical side of the house, to massively reduce the cost of engaging with a modern threat profile. And so when you look at something like the war in Iran, most of the threats that we're seeing are low-flying cruise missiles or Shaheds, which is sort of like a loitering munition. These are, generally pretty slow, but they're, mobile, dynamically controlled. You don't want to shoot a $3 million cruise missile at a $200,000 weapon. The economic trade-off is bad. And so, we originally started working entirely in kind of the surveillance reconnaissance space, and now the kind of plurality of a lot of our work is actually related to air defense, lowering the cost of engaging with threats that are incoming to not only the United States, but also our allies and partners in the regions around the world where these threats are most present.
That's an interesting point on not just the United States, because there are deployments of Anduril technology in the Gulf, as an example. You yourself, you have been and will go very soon to the Middle East. How does that work in practice, being an American company that serves the U.S. military and the Department of Defense, but also allies? You must spend a lot of time meeting with the defense apparatus and governments of other nations.
Right. Yeah, I would say it's like one of the most common questions we get on ethics. These are important questions from new employees, younger people that are, talking about joining. They'll lean forward very dramatically and say, "How do you make decisions about where we sell our capabilities?" And I'm like, well, it turns out there's this whole thing called foreign military sales. Yes. That actually the United States government decides where our things get sold. So those are very clear rules. It's not like I'm making a decision about like, oh, I really think we shouldn't sell to this country. It's like, well, yeah, the government has already kind of pre-decided that that's the case. But yes, it is important for U.S. foreign policy in a bipartisan way. This is not a partisan issue. In a bipartisan way, it's important for U.S. foreign policy to provide capabilities to our allies to make sure that they are fully integrated into our joint operations, which is really important, but also that they have the capabilities to defend themselves utilizing U.S. production that may or may not exist in many of these countries. Like they don't, our allies, many of them, are not going to fund and build a fifth-generation fighter plane on their own, nor are they going to develop really complex, multi-million-dollar counter-air missile systems. And so this is a role that we play in the ecosystem, is to go out and say, to countries like Ukraine or like, the United Arab Emirates or Saudi Arabia or Qatar, hey, the United States has the capability. We want you to have that capability as well. And this is how we're thinking about the cost curve for deploying these capabilities and kind of the layered approach that you can take to reducing the cost per intercept or whatever it is. Now, the tricky thing about all this is that, there's a big difference between being a startup that is designing and developing a capability, which is great, and there's a lot of really interesting efforts that are happening there, and being a producer of those capabilities. And this has really been the name of the game for Anduril over the last few years, is transitioning out of just being like a really innovative technology company and focusing almost all of our effort on how do we produce at scale in a way that allows us to not only supply the U.S. customer, which is our primary customer, but also be supportive of that foreign policy mission and supplying those same capabilities abroad.
Anduril Industries co-founder and executive chairman Trae Stevens, they're speaking exclusively to Bloomberg's Ed Ludlow. We are getting some breaking news when it comes to how it's all playing out when it comes to Korean stocks at the moment. The Kospi extending that early decline to 6% now as we see that extended slump in chip makers, opening sharply lower just about 25 minutes ago. It was already down more than 4% in the early part of the trade. Chip makers extending those declines as we really kind of see this relentless rally in semiconductor stocks, meaning that every intraday dip invited heavy retail buying, increasingly that use of leverage as well to amplify that impact. This will be a real test when it comes to whether we'll continue to see that again. This really reflecting the sell-off that we saw and the broadening, the rotation away from the AI names. The NASDAQ futures also extending the overnight declines there as well. We'll continue to monitor whether this rotation continues through other Asian markets as well. More ahead on the Asia trade. This is Bloomberg.
Here are some corporate stories that we're tracking this hour. Bloomberg has learned that Jane Street is planning to build and finance its own data center to keep up with growing demand for computing power. Sources say the market-making firm is talking to companies in the technology, crypto, and finance industries about building a facility. Talks are still in the early stages, and the exact capacity and location of the data center are yet to be determined. Bloomberg's being told that Airbnb CEO Brian Chesky is starting an AI lab. Our sources say Chesky is in the early stages of funding the new venture and plans to focus on user interaction and design. Unlike online travel rivals Expedia and Booking, Airbnb has not partnered with OpenAI to create a plugin, and Chesky has said ChatGPT's tools are not robust enough. This is Bloomberg.
Take a look at how we're tracking when it comes to Asian markets, and really that standout is that decline that we continue to see with cracks emerging in the Kospi's 105% rally. These concerns about breadth, of course, we had that overnight rotation away from that AI chip-related rally. We're now seeing the Kospi extending those early declines from 4% to as much as 6%, off just those session lows at the moment, but still that pressure, particularly when it comes to retail participation, losing steam, surging margin loans as well. Facing the risk of a BOK rate hike, we could see this play out further still. But Shery, we're also seeing some of this pain being inflicted when it comes to the emerging market space as well.
Yeah, we're seeing EM currencies now having lost four consecutive sessions already. Of course, we're talking about downside pressure in the likes of the Indonesian rupiah, as you can see now topping that 18,000 level. The Indonesian stock market also falling to the lowest level since 2020. In fact, when it comes to emerging market stocks, we are now seeing their worst day in about 3 weeks or so. And you can see, of course, the impact has been big on repercussions from the Iran war, especially when it comes to net oil importers such as India, and you can see the rupee also trading at that 95 level. We had seen a little bit of strength for the Philippine peso against the US dollar, but of course we continue to watch the political drama playing out in that country as well. Our next guest now saying that raising interest rates alone may not be sufficient to alleviate some of the pressures on some of these currencies. Joining us now is Khoon, head of Asia research at the ANZ. Of course, Khoon, we do have that rate decision coming from India as well. Will the rate differential issue not be as big as other macro challenges that these economies and currencies face?
Good morning to you. It's not really about yield differentials at this stage. I think the high oil prices are the initial catalyst for the sell-off, but there are also broader underlying concerns. I mean, both of these three economies, Philippines, India, and Indonesia, face current account deficits. So the starting point was already leaving them vulnerable to high oil prices. And all these three are not beneficiaries of the AI investment boom. And on top of that, you also have idiosyncrasies. Philippines, you mentioned, the political situation domestically is not helping. And in Indonesia's case, huge concerns around governance and potential for credit rating downgrade. So really, these are the other elements that are really driving the depreciation pressure that we've seen. And we've already had BSP and BI surprise with more aggressive rate hikes, and that has not helped. Now, we expect them to probably have to do more, but just hiking rates by itself is not going to be sufficient. I think this has to be backed up with other measures as well. And you mentioned RBI, we're expecting them to hike today. I think we are now a consensus call. Now that is part of a broader defense of the Indian rupee that we expect the RBI to also announce later today.
bucking the trend has been the Chinese yuan, right? Very resilient and also perhaps a reflection of their less exposure to the impact from the Iran war. Will we see that affect the broader emerging market complex and potentially even the yuan starting to challenge the dominance of the dollar?
I think the term resilience doesn't do it enough justice. The yuan is the strongest Asian currency this year, having gained over 3% against the US dollar amidst a very challenging geopolitical backdrop. And it's very clear that the Chinese authorities are basically accommodating further yuan strength, and the trend has clearly shifted towards one of appreciation path. And look, we're starting to see capital inflows return into China. Their exports continue to be very strong and very competitive. So a stronger currency is not going to derail that. China is out of deflation now. So a lot of the underlying worries about the Chinese economy of the past few years have gone away. And now I think China is definitely in a better state to weather this high oil price compared to some of the other neighboring Asian currencies. Hence, why the yuan has fared very well. And we expect further appreciation of the yuan to come. I mean, my year-end target is 6.70 by the end of this year. But I admit, maybe I might be a bit conservative. We could well end up with the yuan strengthening past, my forecast target.
Is there also a sense that policymakers are more willing to tolerate a more comfortably higher level for the yuan, because there's been some decorrelation in terms of how much the currency level will affect exports, particularly if they're exporting more high tech and less of the low cost manufacturing?
Well, I think we have to, understand that the yuan came from a grossly undervalued position. I mean, last year, amidst the escalation of the trade war, the yuan weakened significantly, and now I think part of it is, playing catch up. But if you look at the exchange rates, real effective exchange rate, not the nominal, but the real effective exchange rate, it's still very low. It's still back at levels, similar to 2015 or 2016. So in my view, the yuan is still undervalued, it's still cheap, and further strength is not going to erode China's overall export competitiveness. China has moved up the value-added chain very rapidly, and having further currency strength is not going to impede that. And I think further currency strength can actually also help in China's goal of trying to rebalance the economy, trying to boost domestic consumption, which so far is somewhat lackluster still. So I think a stronger currency can help to be part of that overall policy mix.
What's your view when it comes to petrocurrencies then, so heavily dependent on where we go with the Middle East situation and how oil travels from here?
I don't think there's going to be any major changes to that anytime soon. I think we're still all waiting to see the situation in the Middle East, whether or not the Straits of Hormuz will open up. I think trading in oil will still be predominantly done in US dollar. So I don't think there's a risk of the yuan replacing the dollar. I mean, we hear stories about more trades being done and conducted in yuan, but at this stage, I think they're not big in the overall scheme of things. So I think trading in oil in dollars will still continue to predominate for a while.
Khoon, always great to chat with you, Khoon, who's the head of Asia Research at ANZ. Let's take a look at what we're watching when it comes to this rotation story, right, which really began in earnest when it comes to the overnight session into those financials. The beneficiary, as we see in Japan in particular, as Shery mentioned, we'd already seen some lofty heights when it comes to the financials and the Japanese banks. We're seeing that extended now about 0.2% higher when it comes to the big gainers, Sumitomo Mitsui there. Over in Korea, that rotation also taking place. But broadly speaking, given the heavyweights of SK Hynix, of Samsung, and how much that has really dominated that equity trading story, we are still seeing that broader market extending the drop to as much as 6% in the early part of the session. Well, HSBC and Standard Chartered shares fell in London alongside other Asia-exposed financial stocks after a media report that some banks have suspended opening Hong Kong bank accounts for clients in mainland China. It's the latest reaction to Beijing's unprecedented crackdown on illegal cross-border trading. Let's get to our Hong Kong and Chief North Asia correspondent. Is there. Stephen Angle is with us. So, Steve, what do we know about this, particularly as to how the banks are viewing this?
Yeah, well, obviously the banks and the insurance companies, the financial sector here in Hong Kong is taking it quite seriously. This is a story that first started bubbling to the surface last week, or around May 27th, I believe the story hit the wires. And, you know, I was at the UBS China conference here in Hong Kong. And I talked to Iqbal Khan of the UBS Asia Pacific CEO about it. He says he felt it was really more targeted toward some bad actors, smaller actors, some illicit players on the brokerage side, because, again, Beijing has been very concerned about capital outflows. I think the number from the Institute of International Finance says China's resident outflow in 2025 expected to have reached about $807 billion, the highest on record. So the Chinese authorities have been cracking down on illicit or illegal brokerages that have been operating for cross-border transfers to Hong Kong. That didn't necessarily have the proper licensing. Now this story through SCMP talking about a number of banks have closed certain bank accounts. The SCMP saying the Bank of East Asia Shanghai branch has suspended opening such accounts. HSBC also warning that all funds deposited into investment accounts must comply with Hong Kong's regulatory requirements. And again, I mentioned at the top here that it's also kind of enveloping some of the insurance companies, because we've all known for years now that many people in China have been able to get their money out of China by buying insurance policies in Hong Kong. So insurance companies like AIA, Prudential, which rely heavily on those mainland visitors to Hong Kong to buy those insurance products, also right now in scrutiny. So we'll have to see how far this goes and whether, and right now it seems as though mainland authorities, CSRC, as well as, of course, Hong Kong authorities, whereas the HKMA, the Monetary Authority, or also the Securities and Futures Commission, the SFC, are in lockstep on this.
How broad is the crackdown when it comes to capital flight likely to be?
Yeah, that's, I think, the real key question. Are there certain bad apples, bad actors that the authorities are cracking down on, or is this a broad crackdown because of an even broader scale of malfeasance, according to authorities? We had one analyst, JP Morgan analyst Farouk Hanif, telling Bloomberg News, or actually in a note, I should say, Wednesday, that the regulatory focus on the insurance companies is squarely on companies blatantly circumventing cross-border capital flow rules rather than insurance companies that are in high compliance. I mentioned Iqbal Khan. He said, of course, they have very high compliance and very high scrutiny of accounts. But, you know, HSBC is the world's UBS, the world's biggest wealth manager. And that's also another focus of these crackdown in the mainland is all this wealth creation, of course, in China. They want a lot of their funds offshore. And so a lot of banks, I'm sure, are being asked to look at their compliance methods and to source very forensically, find out the source of that wealth. So again, I can't say how deep and broad this is going to go, but it looks as though the crackdown on capital flight from China at a time when the Chinese domestic economy obviously is sputtering is taken on greater importance to Beijing and, in lockstep, Hong Kong authorities.
Bloomberg Chief North Asia correspondent Stephen Angle there. Catch Steve alongside of On Man and Odd Lots hosts Joe Weisenthal and Tracy Alloway for a special episode of The China Show. That's on Monday at 9 a.m. They'll be part of our team at the Bloomberg Invest Hong Kong event happening later this week. We'll be hearing from a strong lineup of guests, including the Hong Kong Financial Secretary Paul Chan, HKX CEO Bonnie Chan, CFOs of Baidu and Lenovo as well, Shery.
And still handling the Asia trade, Haidi, China's chip makers gaining attention among investors. Especially after memory chip maker Changshin Memory received the IPO green light from the Shanghai Stock Exchange. We'll talk about China's chip boom next. This is Bloomberg.
It's a really big kind of upfront cost to train the models and to serve inference on them. And I think that is, my guess is that, over time, the sort of core set of companies that are working to advance the frontier are just going to need access to capital. And I think the public market is very well suited to that.
Anthropic co-founder and president Daniela Amodei speaking exclusively at the Bloomberg Tech event in San Francisco. And what a great time to be having all of these leaders, as we have seen in the overnight session, that huge rotation away from some of those big tech names. That continues into the Asia session. And you can see SK Hynix, Samsung, Kioxia all losing more than 3%. Very much the pressure on the Kospi, because we know that the SK Hynix stock plus Samsung account for more than 50% of the Kospi's market weight at this point. And of course, the turnover daily is huge. Given these individual stocks, do watch out for those leverage bets on these single stocks, not to mention the broader Kospi that might be adding to some of that volatility. And of course, the concerns keep growing about this concentration, overheating risks, and not only in Korea, but also the US, also Taiwanese tech shares. But what's interesting is that now investors and analysts are saying that perhaps the rally in some of the mainland Chinese semiconductor stocks could actually extend. For more, let's bring in Asia equities reporter Sang-Mi Chan. Sang-Mi, we know that the CSI Infotech Index has, roughly doubled or so in the past year. So where does all of this confidence come from?
That's right. We can start from this gauge, actually. It's added about $900 billion in market cap over the past year. And all of this is actually a different story that we're seeing in the global chip market. China has its own chip story, and it goes back to this mega IPO in Shanghai. Changshin Memory Technologies has filed last week for this Shanghai IPO, which is going to be the largest onshore since 2022. We're estimating about $4 billion to raise. And so all of this kind of points to that interest there. We can see the index actually had this massive turnover, reaching that record this month, accounting for almost half of the market. So there is clearly that optimism there, because investors are now saying that, okay, they cannot, the retail investors who were not able to participate in this global memory rally, and now they have the actual domestic player coming in, so they can move some of their capital into the IPO.
Yeah, and also that broad excitement being held by a very interesting announcement coming from Huawei.
That's correct. So Huawei had this Tau scaling law. It's a new architecture that they came up with in making chips. And of course, the biggest bottleneck for Chinese chip makers is actually the hardware space. So the biggest problem is the lithography. And because of the export controls, they do not have access to that. One of the ways to kind of reroute, or to kind of alternative ways to making these chips, was they came up with this Tau law. And instead of actually making or shrinking the transistors, they are stacking the chips to avoid using these advanced equipment that they don't have access to. And this investors and analysts are calling it a massive breakthrough. And so that is also becoming another catalyst, at least in the shorter term. But of course, there are certain worries. When we compare Samsung or SK Hynix that have just reached that 1 trillion market cap, Cambridge or SMIC, some of the biggest Chinese chip makers, they trade at around, they're around $100 billion in terms of market cap, and their forward earnings is very expensive. So there are these worries, but again, turnover is showing up in the China's chip-making sector.
But to your point, given how big Samsung and SK Hynix have gotten, what's the risk and vulnerability of the broader Korean market that today is just taking a beating?
Today itself is more of the broader Broadcom-driven kind of sell-off. But again, the biggest problem that investors are pointing to is the breadth of the market. A lot of the companies are actually falling, and we're also seeing the retail that used to be the biggest driver of this whole rally that we have seen, 105% gains for this year, is actually waning. And we can see that in the investor deposit, which is coming down a little bit. But at the same time, the margin loans is hitting all-time highs. So that correlation doesn't point to the new fresh momentum. It's actually the other way around. And we also see the won weakening. So that is, again, stemming from this massive sell-off from foreigners. So all of these things are coming in to, putting Kospi into focus. But again, traders are saying that this is perhaps a healthy consolidation that we're seeing here before they find another footing with corporate governance and value-up programs.
Yeah, we're watching for other catalysts as well. Asia Equities reporter Sang-Mi Cha there. We do have more ahead on the Asia trade. This is Bloomberg.
Take a look at how we're tracking when it comes to these major Asian markets. And of course, most notably is what we're seeing when it comes to that downside in Korea, already now extending that downside for the Kospi to 6.5%. This big AI boom story, the memory shortage story, really making it the best major stock market. We're starting to see that rotation out now. Well, Polar's Jim Zalta says investment-grade debt sales will outpace net issuance of U.S. Treasuries this year as big tech companies seeking massive funding to fuel their expansion. Zalta also told us exclusively that mega IPOs, SpaceX for example, crowding the market and adding to pressure on government debt.
It's not only the scale of these. I mean, the last 15, 20 years, the annual equity issuance between IPOs and equity capital markets activity has been plus or minus 200 billion a year. That's the number last 20 years. You take the year of 21 out with SPACs. You know, with OpenAI, Anthropic, and SpaceX, those three companies will eclipse that number. And I think there's commentary about what it means to take a company public today. I mean, the scale that you need to achieve to be relevant is much, much higher than it ever was before. That impacts a lot of smaller enterprises that are 5 to 10 billion. I also think, as much as we're talking in the last 4 to 6 weeks about the AI capex boom, which is phenomenal and unprecedented, I think we're forgetting that there's a lot of other industries. There's the defense industry, there's the utility industry, there's going to be a number of other industries. So I think it's broader, but these numbers are unprecedented, but it just shows you the scale of the marketplace.
You're getting to the heart of a potential issue, though. Is there space for everyone? How much crowding gap will there be?
Well, I do think, we've been consistent, Torsten's been consistent about the impact on longer tenor rates for governments around the globe. I think that is a very real issue. I've been consistent coming here in January and February and April, that rates were not going down in the short term. I do think, we've always talked about 15, 20 years ago, the crowding out effect of government debt. I think you're seeing a potentially long-term crowding out of this massive, long-duration capex boom around the globe and the impact on government debt yields around the globe. So I think there is some dynamics to that. But as I said a few weeks ago, this year the IG market will have net issuance higher than the Treasury market in the U.S. I mean, we got to put these numbers in perspective. The Mag 7 capex this year will be larger than the Defense Department spending. I mean, these are phenomenal numbers, and again, I just think it's broader. I think there is no doubt that there is health and breadth in the market, but I think some pullbacks once in a while and some good questions that get answered. These numbers are unprecedented, and these companies will have to make the return on capital to justify the capex.